Hello, everyone. Welcome to the Ashworth Wealth Weekly Market Update. Kind of jump into this week's slide, kind of catch you up on a couple things going on. This week, we're going to highlight Germany's rising defense spending. This has kind of been hot in the news recently about the pressure from Western countries, especially the U.S., to put additional pressure on other Western countries like Western Europe specifically to spend more on defense for their own defense. A lot of cat and mouse games going on there between countries, but for the most part, Germany seems to be moving forward with it. You can kind of see from this chart that historically Germany's spent about 1.5% of their nominal GDP on defense. It looks like they're projecting now to spend almost 3% over the next couple of years. They have very strict borrowing laws, but their fiscal spending package now has the potential to transform both the country and the broader European Union in the coming decade. For those of you who've been watching what's going on economically with the performance of international stocks over the last 3 months or so, especially while the U.S. portion has been struggling a little bit, this is partly because of some of these defense things that these countries are doing, some of the spending that they're entertaining. There's a lot of factors going into that, but for the most part, it's expected that this will continue and do a lot of help for those that have international positions in their portfolio. Some of this is going to be infrastructure, defense spending, probably be the largest fiscal stimulus the country's seen probably since the post-Cold War. So we're looking at probably since 1990 or so. They typically in Germany have a debt break where they only allow certain amount of spending above 1% of GDP, but they're going to forego that, and you can kind of see some benefits it's going to do for the country as a whole. So for the most part, really doesn't say anything specific other than as countries spend more money on defense spending, those defense stocks do well, the performance of those countries do well. The question is can they do this long term, or will they incur a lot of debt? And so for the most part, it looks like they're not planning on incurring a lot of debt. They're kind of doing this. They think they can grow out of this as they spend more money. The economy can grow in Germany. It'll be interesting to see if other countries do the same. You can see that the United Kingdom there is still spending about the same amount. They fluctuate between 2.5 to 2%, back to 2.5, and then while the U.S., as our economy has grown, doesn't generally need to spend as much money in defense spending. I just was looking the other day that our country is currently spending about $890 billion in defense spending every year. As our economy continues to grow, that number obviously may stay the same, but the percentage can change up or down. So it'll be interesting to see how this does and what this does for worldwide economic growth. Obviously, government debt spending helps economies well in the short run, but they don't help in the long run because the debt becomes a noose around the neck. Right now, I think we're spending $1 trillion a year, just over $1 trillion a year just on our debt. So it'll be interesting to see how what Germany does affects our country and our government if they decide to do something similar. So we'll keep an eye on that. But for the most part, the moral of the story is as countries take more responsibility on protecting themselves, and that creates defense contracts in that company, which creates opportunities for stocks and especially those stocks in international markets. We'll keep an eye on that. Once again, it makes sense to keep a well-diversified portfolio. We can't control what's going on with all these different things that are happening. Having said that, we want to control what we can control. We can control diversification. We control our behavior. We control how we act. We know that the economy in the U.S. economy is experiencing a lot of volatility right now. There's a lot of uncertainty. In the long run, we feel very confident that the market as a whole is very, very smart. They're going to react. They're going to adjust. Governments, as a general rule, are not very smart. They're going to make decisions based on what's best for them. But ultimately, the more time that goes by, the more certain the markets become, and they can settle into a growth mode. And we feel confident that'll happen even in the U.S. economy going forward. So keep an eye out for that. We're dealing with some turbulent times right now, but we're not too concerned about the long term. We're more concerned about the behavior in the short run. Remember, in the short run, markets move on fear and greed. in the long run, they move based on performance and profitability. And as companies know what the new rules are, they can figure out how to make money and how to be profitable and benefit their investors. Hope that helps. Feel free to reach out if you have any questions. We look forward to talking with you anytime. We continue to monitor what's going on globally, as well as what's going on with the tariff situation in our country. We'll keep an eye on that and make any adjustments as necessary. And we'll talk to you soon. Thank you.